We started off with small gains for the major averages. Now we're looking at modest losses, trade headlines being blamed. But how much of this has to do with quadruple witching day? Is that a piece of the volatility as well, especially as we go into the close?
Well, I think we saw some action today because of some headlines, but other than that, quadruple witching doesn't have as much impact because there's so many markets and there are so many participants that don't really have to make that many adjustments as we did when I was a young trader. But I really like what I've seen so far this week. We did make some new relative highs at S&P, did not take out the all-time top just yet. But also importantly, the VIX made a new swing low, and today it was down to the 1330 level, a level that hasn't been to since the end of July, where we had that bottom base and then that breakout. So the market's come all the way back down to where it was.
So, it's interesting you're mentioning that VIX, Alan, because Citi is out with a call saying that you should take the volatility to the upside in oil, take those profits and fund put protection basically against a possible market sell-off because the implied volatility on the VIX or the S&P 500 is so low that at some point it's going to skyrocket higher. What do you think about that? And if you were going to take a move in that direction, what's the timing like?
Well, that's not a bad idea or a bad strategy. You're kind of locking in some of your gains if you were long oil. Now, oil had its breakout finally. For 3 months, it traded between 50 and 60. It's still significantly lower than where it was at this time last year. But we've seen oil back off. I want to see a secondary rally. I think an upward push in oil can also be a positive for the stock market because that'll help a lot of the energy stocks that have been beaten and battered. But using that as a strategy, sure, the VIX is low. Eventually, it's going to bounce up. But what we've seen every single time in the last 10 years, every time we get a VIX explosion, it gets beaten back down. It takes maybe a couple of sessions or a couple of weeks, but that happens time and time again, and the market marches to new highs.
So it sounds like you would not be a put buyer in the S&P 500 right now. Sticking with energy and oil, your trade is on Occidental Petroleum.
Right. Oxy's been kind of stuck as well. That's a stock that's gone nowhere fast, between 40 and 50 since August, so for 6 weeks. And you could see the last time it made some new lows, it did not make new highs in that volatility that you were talking about. Often that's a sign that the short sellers could get squeezed. So I'm looking at an option there, a January call, an in-the-money call, a 40 call. Now, Oxy hasn't been down to 40 since 2008, so you have the right to buy it at a sharp, sharp discount. The $40 call is going for about $6.75. It's $550 in the money. So the break-even's about $1.25 above with 4 months of time. So like I said, I think there's a secondary move. I don't think the oil volatility is over. We just had a little bit of profit taking here this week without any secondary developments.